Welcome to my channel, I'm Scott, and in this video we're going to look at Coke's 10Q. Public US companies issue 3 10Qs and a 10K each year. As you can see, this is the third quarter 10Q. It's as of September 30th, 2022. And in the beginning of the 10Q, there's a table of contents if you want to jump between sections. I usually look at the financials and kind of springboard off of that. So you can just click on the link financial statements, and it starts with the first one, their income statement. This is the profit or loss for a particular period. So their income statement shows us the third quarter of 2022 versus the third quarter of 2021. It also shows us the first 3 quarters of 2022 versus the first 3 quarters of 2021. So the income statement starts with the revenue, then it shows the expenses, and then at the bottom is the profit or loss. So at the very top is their revenue. So in the third quarter of 2022, they had 11 billion of revenue, which is up about 10%, because in the third quarter of 2021, it was 10 billion. So that's pretty easy to figure out. 10% of 10 billion is 1 billion, and it went up 1 billion. For the first 3 quarters of this year, their revenue was 33 billion, up from 29 billion. That's also pretty close to 10%, because 29 billion is close to 30 billion, and 10% of 30 billion is 3 billion. And their revenue went up about 3 billion. Actually a little more than 3 billion. It looks like about 3.6 or 7 billion. So maybe it was closer to 11% growth. So on the face of it, it looks pretty good, a 10% growth. But you may want to compare it to prior quarters and also compare it to other companies. So it's hard to really understand everything that you see in the financials. So you could always search the dollar amount or search the term to get more info. We all know what revenue is. It's a sales for the company. And for this company, it means they sold a lot of soda. But if we want to understand what's behind this 11 billion, we can just search this dollar amount. So just highlight it, press Control C for copy, Control F for find, and Control V for paste. And now we could search that dollar amount, 11 billion. And here's a breakdown of the 11 billion. It's by US and international. Concentrate operations was 2.2 billion US, 4.3 billion international. So 6.6 billion. So about 60% of their revenue was from concentrate and 4.5 billion. The rest was from finished products. A lot of people don't know this, but more than half their sales are not from selling soda. A bulk of their sales is selling the syrup concentrate to bottling companies. And those companies actually make the soda. Those bottlers actually mix the syrup with liquids and put it into the can. They ship them to retailers, and they deal with all that infrastructure and all that logistics. Which is great because Coca-Cola doesn't have to deal with it. They just sell the syrup, and those other bottling companies deal with all that headache. But you can see they do generate 4.5 billion of sales from selling finished product. Let's search again for this $11 billion number. And here's a breakdown with a little more detail. It shows us Latin America sales, North America, Asia Pacific. That's what I meant earlier when I said I start with the financials and springboard into other topics. Because I just searched the dollar amount or searched the term inside the document to get more information. Below the revenue is cost of goods sold. That was 4.6 billion. So cost of goods sold are all the expenses directly related to generating their revenue, directly related to making the soda or making the syrup. So if they paid an accountant to do their taxes, that's not part of cost of revenue. Of course, the accountant's salary is part of the entire organization, but it's not directly related to actually making the beverage. The cost of the individuals in the factories bottling the soda, that's part of cost of goods sold. Also, the rent for those factories is part of cost of goods sold. Their gross profit in the third quarter was 6.5 billion, up from 6.1 billion. So just eyeballing it, it's around 60% gross profit margins. Because that's close to 10 billion, this is close to 6 billion. 6 over 10 is 60%. But you can always do the math if you wanted to. 6,497 divided by 11,063. That's their gross profit margin. So they convert about 60% of their revenue into gross profit. So they do generate more gross profit than the third quarter of 2021. But their margins are slightly lower. But a 60% margin sounds pretty good, right? But a way to figure out if it's good is you want to compare it to Coca-Cola's margins the past few quarters or the past few years. Also, you may want to compare it to similar companies like Pepsi. If Pepsi's gross profit margins were 70%, then Coke's isn't so great. But if Pepsi's is 50%, then Coke's looks pretty good. Then you have selling, general, and administrative expenses. These are most of the expenses not directly tied to making the product. The payroll for the accountant, that's part of this. Say for instance Coke wanted to do a commercial during the Super Bowl and they paid like $5 or $6 million. That dollar amount is part of SG&A. Then you have $130 million of other operating charges. I'm not really sure what this is, so I can just search the term. I'll highlight it, Control C, Control F, Control V, and then search it. I did find this term, but it's on the statement of cash flows. Not much more information. Let's search it more. And now here's a section explaining what other operating charges are. Of the $130 million, $57 million is related to impairments on trademarks. An impairment is when you decrease the value of an asset on your balance sheet and pass through the loss onto your income statement. So pretty much any asset can be impaired except for cash. But goodwill is a popular type of impairment. Goodwill is the premium you pay when you acquire another company. And if you invest in companies with lots of fixed assets, like a shipping company that has a lot of vessels or tankers, those conveyances are really expensive. A tanker could be $50 million. So it's possible after a few years, the value of that tanker decreases. So in order for the company to accurately reflect their balance sheet, they have to decrease the value of the tanker and then pass through a loss on their income statement. So their operating income is $3.1 billion. So just eyeballing it, it looks pretty close to 30% because 11 billion is kind of close to 10 billion and this is 3.1 billion. So maybe a little less than 30%. So it looks pretty similar to last year. 2.9 billion was their operating income and revenue of 10 billion. So of the 11 billion of revenue, they converted 3.1 billion to operating profit. They generated 128 million of interest income. If the company owns preferred stock or bonds, they generate interest on those investments. Interest expense is 198 million. This is the interest they pay in their debt. Even though it appears positive, it's actually a negative. So if you took 3088 plus 128 minus 198 plus 479 minus 53, then you'll get to 3.4 billion. It's just assume interest expense will be negative. So they spend about $200 million of interest on their debt. Even really large companies have debt because debt is a cheap way to finance growth. Say they're paying 5% interest on the debt and they use the debt to acquire another company and the return on that acquisition was 10%. They have a positive 5% return on the use of that debt. It usually makes economic sense for a company to use some debt. If a company has negative cash flow, if they're losing money, they probably shouldn't take on debt. Because when you take on debt, you have to pay the interest on your debt. That means you're gonna have to take on more debt to pay that interest payment because you have negative free cash flow. A company like this has a ton of free cash flow. So it's no big deal if they take on debt. They can easily pay off all the debt if they wanted to. Equity income of 479 million. What is equity income? Well, we could just search that dollar amount, 479. 479 is right here, but this is not equity income. This happens to be 479 for something else. This is related to debt securities. Let's keep searching. We did find 479, but that's 12 479. Let's keep searching. Here we go. Their equity income increased from 479 million compared to last year in the third quarter of 455 million. And this is from equity method investments, and it's offset by unfavorable foreign currency exchange rates because they sell product all over the world, but they're domiciled in the US, so they have to convert all their money back into US dollars. So they may make money or lose money on the exchange rate conversion. But this really doesn't tell us what equity income is. Equity method accounting is when a company owns between 20% and 50% of another company. They have to report that other company's earnings onto their income statement. Let me give you an example. There's a company, Coca-Cola Bottling, ticker COKE. This is a separate company from Coca-Cola, ticker KO. That bottling company does generate most of their revenue from bottling and selling Coca-Cola products, but they also sell other soda products. This company owns about 1/3 of the bottling company. So for instance, in the third quarter of 2022, let's just say the bottling company had net income of $300 million. Since this company owns about 1/3 of the bottling company, they would show $100 million in equity investments on their income statement. If the bottling company had a net loss, then this company will show a loss on their income statement. So this company, ticker KO, probably owns between 20% and 50% of a lot of companies. So each quarter, Coca-Cola has to show their proportionate ownership in those companies on their income statement. Below that is other income and expenses. Looks like they had a loss of $53 million. That's pretty small, it's more of a rounding error. So their income before taxes is $3.4 billion. They paid $622 million in taxes. If you want to know their tax rate, it's 622 over 3,444, which looks like it's pretty close to 20%. Because pretend this is 3,400. 10% will be 340, right? So 340 plus 340 is 680. 20% would be 680. So it's a little less than 20%. So their net income is $2.8 billion, up from $2.5 billion. So it looks like their net profit margins are close to 25%. Net profit margin is net income, 2,825, divided by revenue, 11,063. You can see their revenue is a little bit more than 10 billion. 10 is a nice, easy number to work with. And this is a little more than 2.5 billion. So just eyeballing it, it's around 25%. It looks like a little higher than 25%. But just because they're more profitable than last year, doesn't mean each shareholder gets more money than last year. They may have added a ton of shares through dilution, but it doesn't look like that. Their earnings per share increased from 57 cents to 65 cents. So it looks like the shares outstanding are pretty flat. It went up slightly from the third quarter of 2021 to the third quarter of 2022. Because there's definitely some dilution if they sell convertible debt to investors. Companies like this generally give a lot of stock to executives, and the stock vests over years. So when the stock vests, it dilutes shareholders. But they probably buy back a lot of stock. So it looks like they're buying back a similar amount of stock that was added. So I thought it'd be fun to just do a deep dive into the income statement. If you want me to look at other companies or other financials, we can do that as well. But you want to definitely look at the balance sheet and statement of cash flows. Just because they had $2.8 billion of profit doesn't mean generated $2.8 billion of cash flow. This is accounting profit. They may have lost cash flow. I'm sure they didn't. They're a really healthy company. But there's lots of companies that report positive earnings and negative cash flow, and vice versa. So thank you so much for watching. Please subscribe, like, and comment. Talk to you soon.